the NGS is still sitting on massive year-to-date gains, but beneath the surface, this market is becoming more selective. Banks like FirstHoldCo, FCMB, Wema are leading. FirstHoldCo just pushed over the 6 trillion naira mark in terms of market value, and the all share index remains firmly up near 58% year to date return. But with weak and softer volumes and the H1 earnings mostly out, investors now face a tougher question: what still has upside in this market? So, in this episode, we will look at the next phase of the market: banks, oil and gas, dividends. We'll talk about fixed income, naira stability, and foreign reserves, post earnings investment strategy, and exactly how investors might think about deploying fresh capital today. And I'm delighted to be joined by Oladipo Ajayi. Oladipo Ajayi is head fixed income and vice president at Chapel Hill Durham. Oladipo, welcome to the Edge.
Good morning. Thank you very much for having me once again, Dr. Carfor.
Always a delight having you, Dipo, and thanks again for joining. All right, also welcome everyone, and we're glad that you found this channel. If you are new to this channel, please like this video, subscribe to the channel, and hit the notification bell. We are here every weekend helping you to make smarter investment decisions and explore the financial markets together. All right, Dipo, how's the week been so far for you?
It's been great, and it's been up and down. So depending on what area you want to look at it. On the fixed income that side, it sounds as if it was a good day. It was a good week, considering the level of activity that we saw in the market. And but on the equity side, there was more like ups and downs in the market. And that creates a bit of volatility in the market. So all in all, I think it's been a very good week.
All right. Let's talk about the equities part first, and then we'll talk some more about fixed income market. So we know that a rally's quality is often judged not only by the index gains that we'll see, but by the breadth and maybe liquidity turnover and even participation. We've always talked about local and domestic participation on the on the NGX, because we know that a narrow or advanced kind of maybe large cap stocks, if that is the focus of the market, then we might be experiencing the same type of lullness that we are seeing currently. So if you look at the full trading week for the market, I think except for Thursday, where we saw that 192 billion bounce that was added to the NGS. The NGS has shown some selective strength, with the all share index firmly around 245,000 points, and the year to date near about 58% year about. So the thing that I want to find out is this still a heady bull market? So are we seeing a narrow late stage advance that could easily reverse?
Well, when you look at where markets currently trading now, of course, what's currently happening that people are taking profit, and it's just normal in market time. And when you look at the peculiarity of the names that people are even taking profits on, we have a couple of sound names there. We have GTCO as one of the instruments in that segment of the market. And this, what this tells you is that simply people are just taking advantage of the elevated price level to also cash in on the capital gain that we currently have enjoyed. And also, it's not something that calls for panic. is something that also bring room for people that actually makes the opportunity to actually lock into some of these names. Market is not perpetually up. There are times where you see a bit of retracement,
Mhm.
maybe on the back of the institution not meeting their numbers, or maybe a general macro issue, or maybe even sometimes peculiar to the market at that particular point in time. Because there's sometimes in the market you also need to be sensitive to when you look at towards the end of August. I won't be surprised if I start seeing people taking profit because they have obligation due in September where they need to start paying school fees and the like.
Yes.
And you have investors that actually invested in the market, and they also need to catch in on that to actually meet some of their obligations. So it's not something that calls for panic. And if you see the level of drop that we have seen, and this is a market that has yielded about 57.81% year to date. When you look at the current market, it's the market's about 245,000 points, and gives you an idea that this is actually a very strong market. The dynamics of the market has changed. Market currently has debt, and also at the same time, don't forget that the composition of market participation now has aggressively skewed to the side of the local investors.
Mhm.
As we speak, currently, local investors can boldly say that they currently control about 85% of the market. So the era of foreign investors are dumping, and that's the reason why market is back. Those era are gone because currently now we have very big asset size. The pension fund asset under management has actually grown over 50% year to date, and that's we include contribution. You also include appreciation of the asset that they are currently sitting on. So it means that they have capacity. PENCOM has also legislated that increase the number of the percentage at which most of these pension administrations can actually participate in the market, which further has increased the level of inflow into that segment of the market. So currently what we are seeing may be more like a bit of retracement, but you will see that there's still a lot of blue linings in it. You see good names in the market that currently still holding market for. And when you look at the overall, market has a lot of fundamentally strong instruments that you can actually boast off and put your money in it.
Yeah, I think I agree with you. I think it's something that is typical of this time of the year as we move towards I move past the earning seasons. The market is usually kind of quiet, and you already started talking about maybe investors trying to meet some of their obligations, especially as maybe school resumes in September and all that. But let's talk more about the banking stocks. So banking stocks like FCMB, FirstHoldCo, Wema, we've seen that they've repeatedly led gains this week, while many other names, lagged or hit their daily limits. So after the recapitalization exercise that we noticed or that has just been concluded, are Nigerian banks currently the only form of reliable game? Like, if you want to invest, then it has to be Nigerian banks, especially in the banking stocks. Are they like the reliable game in town? And if not, which other sectors or individual stocks should investors be watching more closely, especially at this time of a period where there is quiet in the market?
For me, if you look at it critically, and like we have said it on this show before, that whether the downtime or the uptime, the banking names are always the one enjoying some of these things. In the uptime, when the interest rate is elevated, they enjoy high yield. In the name in the period where the rates drop, they enjoy huge capital gain on the asset they are sitting on. And so when you look at it, it means that whether rain, whether sunshine, most of these banking names actually has a very good opportunity. And beyond that as well, like you said, most of these banks, they just recapitalize. they have more firepower, they have more capital to sweat out, and when you look at FB, FirstHoldCo peculiarly, he has his own peculiarity. FirstHoldCo just got an approval to raise $1 billion on from the market, and that's commenced August 3rd. And so it means that they are currently in the market. And if you have seen the trajectory of the movement of these instruments, I can remember vividly as of July the 5th, this instrument was still trading about 52 now.
And now it's about 140.
But as we speak now, you see the level of movement that we have seen. And there are a couple of names that like that as well that are currently sitting in the market. And most times, market is not actual. Market is about sentiment. You must be able to lock in ahead of the market. So if you want to wait until when you see the green light, sometimes when you are seeing the green light, it means that the whole transaction has been concluded. That could even be sometimes where some people are ready to actually take profit. But beyond the banking sector, there are other names in the market. We talk about telecom sector. MTN is still a very good name. Airtel is still a very wonderful name. In the cement sector, Dangote is a very good name. Also, Lafarge, which has also changed name to HBM, are also a very good name in that segment of the market. You have the consumer name, the Unilever, and so there are a lot of good and sound names in the market where you can actually push your fund into. The major thing is that you must be able to understand what is the dynamics of the market per time, and what is the euphoria about. Because sometimes you need to also be very careful when you see some stocks actually behaving maybe abnormally, and you see the outside momentum, and you need to be very careful so that you don't get locked into some of the. We see people are still stuck in Geregu up to date. They enjoy the level of capital appreciation, but yet they are unable to actually exit most of the positions they are currently sitting on. And so the market is not about the capital, but it's about you being able to actually get to actually sell when you want to sell, buy when you want to buy. You ensure the name has a good depth, and that's one of the reasons why we celebrated the NGS decision to actually change the market trading dynamics. Before now, there are big cap stock names. Before you can actually change the pricing, you must trade one lot size of 100,000. But now it's going to be about 10,000. So it means that some of these names that are actually illiquid, that people tend to find it very difficult to change the price over time, and they continue to actually show fictitious valuation. Now, with a 10,000 naira price volume, you can actually change the price, and we're just waiting for the full implementation of this policy. And with that will one way help recalibrate the markets, create liquidity across. But for me, the names I actually mentioned beyond the banking name, they're actually very good names.
Okay, so still talking about FirstHoldCo, so it's actually crossed 6 trillion naira market value. It's about 6.4 actually, if you look at the record price of 140 naira per share. So where does the bank go from here? Is there still meaningful upside left for FirstHoldCo, or has a big re-rating largely played out? I mean, at current levels, is FirstHoldCo still investable for new money, or should investors be more selective and cautious?
For me, for someone like me, if I have the capital allocation to participate into the market, I think I will pass on FirstHoldCo. For me, it's a hold for me currently at this current valuation. It looks to me at heavily overvalued. It's currently trading at premium to book value. And I think it's trading close to about 1.4 point to book value. And when you now compare to names like Zenith is still trading about 0.9 thereabout to book value. SEX and also GT Bank trading a beta book value. So for me, I will pass on it because of the level where it's currently trading, and because between just under like about less than 40 days, this instrument has moved close to about 80 something naira. And that's close to about like 150%, if I'm not wrong, around the level of movement. And the dynamics of the movement was premised on the fact of the results released. But I don't think the release result is enough to actually support the instrument to where it's currently trading. So for me, if I have the opportunity to actually make decision on whether to buy or not to buy, I will actually pass on it. For me, FirstHoldCo is a hold for me.
All right, at current levels. Okay. Yeah. Okay. Let's talk some more about oil and gas, the oil and gas space. So we saw that we saw that result from the NNPC. Oando also just announced about I think 2.1 trillion naira in revenue, profits about 68.6 billion naira as well for the H1. I think NNPC recorded about 2.28 trillion in H1 profit. So for the oil and gas companies, I know that headline profit is only part of the story. So investors would also need to assess the cash flow quality of these companies, the FX exposure they may have, and any policy risks before, treating those earnings as sustainable. But how solid is the quality of these results? Separately with talk of the NNPC, I think planning to conclude that listing on the NGS. I think they've recently had a meeting with President Tinubu on that. So, and just bring all together. Where do you see? When do you see a realistically a date? I mean, when do you see a date where this can happen realistically, especially for the listing, and how sustainable do you consider these results from the oil and gas, and especially for these two companies?
Well, for me, I think concerning the listing, this has been in the pipeline for a long time. But now that we have gotten a nod from the president of the country, it also means that he's throwing his heavy weight behind that decision. And because, sincerely speaking, I also think that there's a lot of capital to unlock by NNPC. But I'm sure they are not just taking advantage of that enough. And look at Dangote at the last IPO, a private IPO. We all understand the level of capital that was on the table for him to actually take. And there is also filler in the market that is still coming back for the IPO. And for the IPO, the view that it may likely take as much as maybe close to $3 to $5 billion as well from the table. And imagine this level of funds you are having. Equity of about $7 billion coming to you. What is the total valuation of the refinery when it was completed? I think it was about $22 billion. So even when you're thinking of to actually expand your capacity, you have capital at zero cost to use to further expand your capacity. And I think that's some of the things that NNPC have left on the table for a long time. This is not immediately they actually restructure NNPC, and you now have different segment of NNPC. I think it was at about that time that they should have just take advantage of the market, graze the market by now. Maybe they would have been able to raise huge capital by now. They would have done a lot of expansion on their side. So I think it's actually a laudable one. And the whole market is waiting for NFCs to come to the market. Dr. Kafo, look at a company that posted 2.28 trillion in H1. How many other companies has posted that level of return this year in the market? You understand? So it means that the level of a dividend that investor would have been expecting by the end of the year will actually be massive. So NNPC is a good one for anybody that would want to actually invest because when you're looking at oil and gas, of course, you want to have some element of NNPC instrument in your market. And on the side of Oando, you saw Oando, and my concern about Oando has always been that huge top line, that low bottom line. sometimes you find it very difficult to actually equate or reconcile. Look at the top line that we posted 2.1 trillion. And at the end of the day, what finally came to the pot of the available for investors is just about 68 billion. And
Yeah.
so it has always been a concern around Oando. And sometimes you wonder why the stock has not been appreciating aggressively like other names that you have seen that plays in that sector. And I think this is one of the pointer to it. You see massive top line, and by the time you get to the bottom line, you find out that there's a lot of activity that's actually eroded the names. And people are always concerned about the corporate governance of Oando, and that's one of the reasons why we are not seeing that level of appreciation on the name. And for me, I think Oando would have been a very good name at any point in time, considering the level of activity that we are seeing in the oil and gas sector. What we did not just need to do is to tweak a lot of things and ensure that they are cost effective, and cost efficiency is actually very, very essential for names like this. And another thing also, they also need to actually revamp their corporate governance. The perception of the market around them is not very, very palatable. So it's something
Yeah.
that they need to actually re-engage the market. They also need to find a way to actually change that mentality and also be hopeful. But when you look at the whole sector overall, I think that sector needs to actually be charged windfall tax for the year. Because if you can actually do same to the banking sector some years ago, I see no reason why you can also come to them this time around and say, you guys too, you have
You've made a
made
lot of.
a queue. And you saw what the president of the United States said sometimes last week, where he said that the oil and gas sector guys have made huge money this year. And that was truly, it was on the back of the activity that we saw in the
In the
Middle
Middle
East,
East.
and
Yeah.
that's exactly what's playing out. So you see names like Karade, names like Seplat, NNPC, Oando, and a couple of other names like that are not even listed on the exchange, also that have actually enjoyed the largesse that was coming from that came on the back of the crisis in the Middle East. So, but when you look at it all, all the gas sectors remains a very good sector. Beyond the whole, most of them are actually finding a way to actually ensure that they diversify aggressively into the gas aspect of it. You see names like Seplat. Seplat can boldly say that they are 50-50 in terms of the oil and the gas. And you see that same thing playing out on the side of Arabia. So it simply means that if the world says that they are moving more into a clean energy, most of these companies can also still weather the storm, considering the diversification that they have actually aggressively done.
Yeah. So I mean, where do you see the projection for the prices for some of these stocks like Wando that we talked about, Aradel and Seplat? I think Aradel is still some of them.
Aradel for me can boldly still trade around 2,100 levels before the end of the year. And Seplat is a 14,000, 15,000 naira stock.
Hmm.
And don't forget, Seplat has dual listing. And
Yeah.
sometimes you see it trades better in a more efficient market, like the LSC, where we see better valuation of this name. So I think when you look at names like Seplat, when you look at names like Aradia, I think they still have a good upside.
Upside to them. Okay. All right. Dupo, let's switch gears a bit and talk about some of the dividends that have been announced and the valuation of some of these companies. So when a major interim dividend on the table, like the one we have for MTN, about 26 naira. We talked about HBM, formerly Lafarge, that's 16 naira. Then Seplat value. What's that in naira? I think they have some. I think some double digits cents as well. I think it should be about 140
Yeah,
converted
yeah.
to naira. Yeah, the dividends are going to be paying. So, is the market already responding to these declarations and the share prices? Have you noticed any meaningful changes to the share prices of this company since the dividend was declared?
I think what we have seen was more like a surprised activity in the market. A lot of investors would have expected a bit of repricing in some of these good names that actually announced result. We saw HBM, what they announced, NTN, Seplat, and like we mentioned, these are fundamentally strong names in the market. So you'd have expected market to actually reprice them aggressively upward. But currently, markets is very, very quiet on most of these things. NTN actually gained just about 1% in the last week, and when you look at other names like Seplat was almost like flat. HBM, even at the point in time, actually shared weight. Of course, we saw a bit of activity on HBM at the beginning when it was newly announced, market repriced up, but currently we are seeing a bit of pressure on that name as well. But for investors that are actually investing for a long time, keep saying there's no other time to buy most of these good names. HBM, very good name. This is a Chinese company. And I keep saying that they don't go to any economy to go and play.
Yeah.
When they go into any economy, is to go and take over the market. So I know these people have a lot of things in their offering. And I remember when they were trying to do the transaction around De Lafarge and ABM, it was around something at a point in time. But when you look at where this stock is trading, and this between then and now, it's not. I don't think it's more than 18 months, and we have seen that tremendous movement in the valuation of the company. And so they are coming to that market to come and rescue market share with Dangote. And you all know that when you look at cheap capital, you talk about the Chinese because they can always go back to their source to go and get funding at a cheap rate and use to further develop and expand capacity. So for me, I see, despite this quietness that we have actually seen on the back of the very good interim dividend that were announced by most of these names, I still feel that this is fundamentally strong name, and investors that has spare funds should look at actually apportioning some of their capital into some of these names.
Okay, so dividend announcements can attract short-term demand, but as you know, in finance theory, reminds us that we need to check the sustainability of those cash flows and not just the size of the payouts that have been declared. So, are you saying that at current levels, the stocks are okay for entry, or investors should wait a bit more to see better pricing?
Yeah, okay for entry because you look at where MTN is trading, a company that printed 1 trillion profit, and you look at where Seplat, look at the performance of Seplat, look at the performance of HBM as well. And these are good names, like I mentioned. So anyone that has fair capital, big bold to say that it won't be unwise to actually push some of their capital into this market.
Okay. All right. Let's talk about the fixed income market. So we've seen some yield compression in the fixed income market since the last auction, the FGN bond auction, the Treasury bill auction. And we're also saying that the central bank canceled the auction that was supposed to take place August 5th. And so we're seeing yields continue to decline in that space. So, what has been your impression of the markets in the last week?
Well, the activity we saw in the market was not unexpected, and on Friday, prior Friday, the central bank released an information to the system that the auction that was supposed to happen on Wednesday will not be going on because of other things. And so what market did was meaning that people that have idle capital waiting to actually participate at the auction means that you need to actually invest the fund now. So where else do you need to go? You go back to the secondary market. And we saw the impact of that on where the 1 year paper actually traded. The 1 year paper are traded as low as 16, 17 during the week. And this is not only peculiar to the Treasury bill side as well, because it seems that the information came in back to back, because the information came in just some days after the DMO released a new calendar for the quarter, which also depicts that the borrowing, the aggressiveness to borrow has actually dwindled. So it means that they may not be borrowing as much as what they actually highlighted at the beginning of the quarter. So what market sees this is that more like there's every tendency that we will likely have debt of security in Q3. So on the back of that, market quickly readjusted, and there are people that already short the market as well. So that brought in a bit of short squeeze as well, because they need to quickly run back to the market to cover their exposure into the market. And so when you look at some of all these things, and also backed by the aggressive interest by foreign investors in the market. So all this play out in the week, and that actually helped to actually push the yield down. And like I said to someone, I said, the reason why we didn't see market trade below 17% conveniently was because that the 17 actually more like a psychological level. You tend to see markets want to stay on around that level for some time until when there's one aggressive news that will actually break that support. That level, that 17% level support. But when you look at the level of liquidity that was sitting in the system, of course, it's enough to say the market should have traded below that 17% level. Although we noticed by the close of the week, the bit of retracement. And well, like I mentioned, market is a market. Some people would come to the market to take advantage of the price appreciation to actually exit their position, and that actually pushed a bit of pressure on the market on Friday. And so when you look at it all together, I think it was a good week for the fixed income guys, despite the fact that the central bank was in the market twice to actually mop the liquidity in the market.
Okay. Have there been any communication regarding the FGN Savings Bonds when that's going to happen this month?
The FGN Savings Bonds happened this week. That means that it started on Monday, and the offer closed on Friday.
Oh, it's closed already?
It closed on Friday, and the rate was 13.963 for the 2-year and 14.963 for the 3-year. Of course, we'd have noticed that there was a bit of drop in yield, and that could also be attributed to what we have seen from the last month of bond auction as well, where market is currently trading. We have also seen tremendous drop in yield, which also was factored into the savings bonds as well.
Okay, so that's about 70 basis points drop from the previous closing in July. Is that correct?
Yeah, but that cannot be compared to the over 100 basis point drop from where the auction closed in July and where the secondary market is trading now.
But looks to me like many investors are, not aware of that instrument, because if you look at that return, so you're saying about 14.9, and that's approximately 15% per annum. Is that not correct?
Yeah, it's 15%
I'm not sure
per
of many
annum.
banks that can boast of that dividend return. I mean, that type of return for you on a yearly basis, and that's for a 3-year instrument, right?
Yeah. Yeah, like I will always say, the savings bond is actually has not been aggressively marketed enough, because this is the market where investor with 5,000 naira can actually invest. And when you invest, you get a quarterly coupon, which is far better in cash flow compared to the normal bond market. Beyond that as well, you you also have this instrument listed on the NGS. It means that you can
You can
also have
trade it easily. Yeah.
exit opportunity in the event that you need to actually exit your position. So I think that the government just need to actually do more around it, sensitizing people, more, because the motive for actually creating that segment of the market is to target the retail investors and just to actually help them actually have that savings culture. Imagine someone just buying every month. Every month you are buying 100,000 naira worth of savings bond at every opening. By the end of the year, you'd have done 1.2 million, and on 1.2 million, you have an idea what will come to you in terms of
Yeah.
quarterly coupon, and that could also help stabilize your cash flow. So I think savings bond is also a very good one for people that has little available capital and
To
that don't
deploy.
have that expertise to actually invest in the bigger pool.
Okay. All right. Thank you everyone for still staying with us. We're here right on the edge talking about the financial markets, Nigerian capital markets, bonds and equities. And still delighted to be joined by Oladipo Ajayi. Dipo, thanks for staying on.
Um,
All right. Dipo, let's talk about the foreign exchange, naira, and the rest. So naira has held relatively firm around, I think, 1,365 to about 1,370. The external reserves are near multi-year highs as well, and as the president just sat with the NGS group, I think, to push that capital market roadmap towards the $1 trillion economy. I mean, I know some people say that's a pipe dream, but it's with much work and framework, I think we can achieve it. So currency stability and strong reserves, we know that they can improve investor confidence, but market will usually want to see whether that stability is going to be supported by durable FX flows. So my question is the market, is it the macro stability finally sustainable as it is for the Naira?
for me, I think where I'm seated, I will surely bet in favor of Naira for quite some times. And my view is premised on where we're currently sitting, where we were coming from, and you look at the level of aggressive reforms that were done by the central bank. I remember when the new administration came in, it was almost on a weekly basis that we were getting circular from central bank,
Yeah,
bringing in different ideas that could help actually transform the market. I remember when the market, the FM market was launched. I can remember vividly, it was December 5th that year. I think it was 2024. And I said that time that it means that Naira is now open for a better valuation. And between then and now, we have seen that tremendous valuation of Naira. And
yeah, you see it.
we can see that the appreciation is market driven, it's not fictitious. Because for a long time, the central bank does not even need to actually intervene in the market. I even remember sometimes earlier this year, it was central bank, instead of actually intervening in the market, they are part of the buyers of FX in the market. So what were they trying to do to try and stabilize the market? So currently, when you see the valuation of 1,365 naira, I don't think that currently is actually overvalued at this level or appropriately valued. I still see Naira still undervalued at this level. And my view is premised on the level of reserve we are currently sitting on. And also, I don't think I have any panic around maybe there could be pressure around Naira. Because currently, the point in time we were not only exporting crude oil, we are importing refined products.
Yeah,
But as we speak currently now, seems that there's a bit of respite. You have one of the biggest or the largest refinery globally sitting in your economy and producing close to about 650,000 barrels on a daily basis. And the company is looking to actually expand to about 1.2 million barrel per day. So it gives an idea of where we are heading to. So it means that there's every tendency, because when you actually produce like over 1 million barrel per day, I doubt Nigeria will be able to consume half of that production on a daily basis.
Yeah.
So it means that on a daily basis, that this company will be earning effects, and which actually will be actually coming into our economy, and that will continue to actually help stabilize effects. And also the president actually mentioned that sometimes, the NNPC chairman mentioned sometimes last week that the end goal of Nigeria is not to continue to export crude oil. That we are looking to actually export refined products. So it simply means that we will not only extract this raw material, we actually transform the raw material into a refined product and now be more like the real supplier to the West African and some parts of Africa. And to me, that sounds very good because what you would do is that there would have been added value and there will be more cash flow. So when we look at on the foundation where some of these policies are sitting, I think I have confidence that the currency will be stable for quite some time.
And then we have some of these companies that are yet to, complete work on their refineries. We have the BUA, I think the energy group as well, still working. And then we have some other companies working on modular refineries.
Even the NNPC are also bringing a Chinese company to actually take over the Nigeria refinery, Nigeria, Port Harcourt, Kaduna, 3 of the refineries. So what they are trying to do is that so they will come in and more like so they get a shareholding on this. So the NNP is not looking to part with any capital. And like I said, when you bring a Chinese company into any business, of course, they will surely transform that business because they have the capital power, the financial power to actually play. And the financial power is not at 35% like we do have in Nigeria. They can get the fund at a very cheap rate considering where they are coming from.
Okay, then I think also happening during the week, we had this National Economic Council meeting where they approved Project Gazelle 2. I don't know if you've been following that. I think that's about $4.5 billion oil back refinancing. And I think that's pledged to reduce our crude oil volumes that previously I think they were pledged volumes, and now I think the plan is to unlock some of these volumes so that they can continue to supply to the market and even to the local refinery. So the question is this a genuine structural improvement for the Nigeria's reserves and fiscal space, or simply some temporary restructuring that will postpone the deeper pressures?
Well, if there's one thing I will give to this current administration is their willpower. Whether they are making wrong decision or they are making right decision, the willpower to follow to the end. And when you look at what happened on the FX side, when you look at what happened on the subsidy removal, when you look at about a lot of policy change on the part of central bank, of course, when you look at the level of transformation we are seeing in the oil and gas sector, and that was on the back of some of these great policies that have been shown out to actually support activity in that segment of the economy. And for an economy that wants to actually grow to $1 trillion, of course, you need to unlock the opportunity that's actually sitting in that part of the sector. And because when you look at countries like Qatar, today we talk about Qatar, we talk about UAE, and most of these companies, they use the cash flow from the oil sector to actually transform the economy and diversify the economy from oil and gas economy to more like a tourism economy. And I think that's the same thing that we need to do as a country. And we need to unlock the opportunity that's currently sitting heavily in the oil and gas sector. We saw what's happening in Saudi Arabia as well. Saudi Arabia is actually aggressively pumping that oil to actually use that to diversify also their
Yeah.
economy. We need to learn from some of the templates of most of these Middle East guys, and I think that that's one of the things that we are currently trying to do here now. We are trying to also maximize the opportunity that is seated in that sector. What's the total production of Nigeria as to speak now? I'm sure when you had the condensate, maybe we'll talk about a 1.8 million barrel per day.
Yeah.
And this is a country that was producing about 2.2 million barrel a day, aggressive on a daily basis in around 2010, 2012, thereabout. But here we are now. At the point in time, I think during the Buhari regime, our production dropped to as low as 900,000 barrel per day. So, but here we are now. We have moved from where we used to be. And what led to the movement? Because we have been able to actually embrace or attract or find a way to lure fresh capital into the oil and gas sector to help develop the sector, to help. So for you to be able to do that, you need to intensify most of these capital. You need to give them that incentive they need, because how would you reconcile that Mobi won't leave Nigeria at a point in time and they headed down to Angola? So it means that there's something you are not doing that Angola did. And these are some of the changes that we are currently seeing in the oil and gas sector. So I think it's a laudable one. And I think it's something that the president will actually follow to the letter to ensure that. But because this sounds more like the president forte, this is where he has worked. He understood the sector very well. He knows how to maximize and use the sector to actually print capital. So I think this is a very good one, and I think they will actually want to follow it to the end.
Yeah, I mean, I was only saying that because, oil-backed refinancing obviously can improve near-term liquidity, but the deeper question would be whether it strengthens, our balance sheet structurally, or merely just changing the timing in terms of the future obligations that we have. But I understand the need to, take some of these actions now. We've also seen Brent crude swing sharply in the past week on fresh, Houthi attacks on the Red Sea. So for the Nigerian market, especially one that is intricately linked to the movement of crude oil prices, do you see this geopolitical volatility as some rocket fuel for the NGX and the Naira, or the kind of external shock that could test the current stability?
Well, there's nothing extraordinary again. We have seen this thing happen from since February 28th till today. There are times you see, it looks as if everything is getting settled. And sometimes somewhere you just see another level of escalation. And so market is not surprised. And don't forget that what changes or what moves markets is when something extraordinary happens, because there is something you have factored into the model. We have factored into the model that there will be escalation coming in, because I remember most time people have this understanding now that maybe every Friday we should be expecting a pronouncement from the president of the United States around what is happening in the Middle East, which could one way or the other create a bit of volatility in the market. So when you see issues like this happening, it's not something the market will panic around again, because we have seen it happen several times this year. But the only thing is that I think we just need to look at it, who benefits from this and who is losing. From this, who benefits is the government benefits because they're more FX inflow. The IOCs benefit because they enjoy better pricing of their products in the market. But those people that suffers remain the average individuals, and it's not peculiar to Nigeria. It's across the globe. When you look at the prices of gas across the globe, you've seen that it has actually increased aggressively. And this is one of the things that is feeding into the inflationary pressure. And that's one of the reasons why you've been seeing some central bank actually increasing the policy rates just to actually find a way to actually rein in the current inflationary pressure. So when you want to look at it, I think it's good for the government, but not so good for an average Nigerian.
Okay, Deepo, let's talk about this post-earnings season and the how to play this quiet market strategy. So the H1 results have now been released. So what should we be expecting in the next coming weeks? Are we heading to a classic post-earnings quiet period of lower volumes on sideways, those type of sideways trading? Or are there still still enough catalysts in the market to sustain any meaningful momentum?
I think there'll be sideways trading. And when you were talking about 6 weeks, and don't forget that by the end of 6 weeks, we'll already be talking about Q3 result. And that means that we are getting closer to the end of September. So markets already waiting what will be the Q3 result of most of this company. And that could also be another level of catalyst that can actually drive a market activity. But between then and now, I think we'll see more of like sideways trading, people taking profits, people locking capital into maybe on undervalued instrument. But I don't think we'll see anything except that there's any exogenous factors that a market that never factored in. Maybe there's a big global crisis that can maybe create more like a cloud effect on the whole global market, and which Nigeria is also part of, and that also now Nigeria had his own fair share of that crisis. But beyond that, I don't think there's anything that can actually drive market aggressively downside or aggressively upside. I think market will just be trading sideways.
So, I mean, many retail investors at this time will either freeze or chase the last big movers. So, how should ordinary Nigerians investors actually position themselves right now? Are they to lock in some gains or rotate into fixed income? We just talked about the FGN Savings Bonds. Or should they hold cash or, actively search for undervalued names in the broader markets? What would be your take?
I think it depends on where such investor is seated. If you're an investor that is currently sitting on cash, I think there are a couple of undervalued names in the market where you can actually push your fund. If you are very, very conversant with this channel, we speak around most of these names that we feel that they are quality names. And these are names that could stand test of time. It's not all these yo-yo stuff of stuff like maybe it's up aggressive today, aggressively down tomorrow. No, there's names that you know that they can start test of time. We've mentioned a couple of them on this show today. So if you're sitting on cash, you just look at which one do you think actually resonates with your portfolio and try and build around that. But if you are currently sitting in the market as you speak currently, there's some stock that you feel that they could have actually be overpriced, and you can actually cash in on the valuation. I mentioned earlier on that for FirstHoldCo, I'm currently having a hold on it. I won't be going into FirstHoldCo now. If I have FirstHoldCo in my portfolio, I will sell down and look at other undervalued stock where I can actually push my funds. Don't forget that this is not Gerigo. This is a regulated industry, and it means that beyond what the company is doing, the central bank is also looking. So for me, I will actually take some profit and actually push my fund across other names in the market.
Okay. Any updates on the meeting between the Fuso Index and the NGS because um, that I know we're expecting a decision from the index. I'm talking about the Fuso Index by end of August. Do you have any information about where things stand right now?
No information yet to the market, but like I said, I think it was my last show with you. I mentioned that I will be surprised if Nigeria is not enlisted back onto the index, because I expect by now the NGL would have been able to actually cross the T's and dot all I's with Russell to ensure that Nigeria goes back on that list.
Okay. All right. Let's begin to wind down. Um, and I got a few of these questions that I wanted to find out from you. So one of the common pushback that you hear from ordinary Nigerian is, why does the CBN keep celebrating higher reserves? Right? CBN announced recently that Nigeria's gross reserves about $52.5 billion. The net reserve is about $40 billion. So many Nigerians are asking, why does the CBN keep celebrating higher reserves when people are still struggling with hunger, high living costs? Okay. And how do you respond to that sentiment? And do you see any realistic way these strong reserves could be channeled more directly into productive investment that improve everyday lives?
Well, the core responsibility of the central bank is to ensure stability of currency. They also need to ensure there's stability. It means that there should be predictability.
Mm-hmm.
So it means that the 1,000 naira that I had um, maybe about 3 years ago must, to a great extent, have almost the same value as the 1,000 naira that I'm having now. And I was looking at the Kenya shilling to USD, and it broke my heart that it's currently trading about 120, 129 Kenya shilling to $1. And
That's
well,
been over 15 years strong. And it's been there
yes,
since. I mean, I've been tracking
exactly.
that currency, I think back since 2010. It was about
Mm.
110 to $1 then.
So
So if you're looking at 1000 and I mean 110, you now say it's about 120,
129.
129. Okay.
So now look at it from this perspective. We were at the same level in 2007. Nigeria currency was trading around 117, 115 in 2007. And we are trading around the same level with the Kenyan shilling. And currently, the naira has depreciated over 11 times the value of the Kenya shilling.
Mm-hmm.
So it gives you an idea of the fact that what a reserve would do to you is to help you maintain that stability of the currency. Reserve, as it sounds, is not for spending. That is why it's called reserve. Reserve is what we call raining day um 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 borrow me
Savings.
word, that's the
Savings.
savings. Something that can actually help you in the days where it started raining aggressively.
Yeah.
We saw when it started raining in 2023, and suddenly JP Morgan released a report that our net reserve was actually 3.5 billion, not the 33 billion that were actually projecting. Because truly we are not saving for the raining days, the pressure came. And the currency moved from 700 naira and it tested as high as 8,800, 8,900 naira. And that was on the back of that. You see, the reserve that you have is so that when manufacturer needs to buy machineries, they have FX to buy machineries.
Mm-hmm.
When you and I need to pay $100 subscriptions for business of whatever we use on businesses, you understand me? We are able to do that because what it does is that it helps you your business activity. If you remember those days where you cannot use your Naira card to do most of these transactions, you know how difficult small scale medium enterprises are finding it very difficult to actually pay for all those small funds that they need to actually subscription for their
Yeah,
business,
even
all
at the
those
time
YouTube.
was difficult to pay $50.
Exactly, you understand? And this thing was actually affecting business activity a lot. But now you can go out there to spend your Naira card. Don't forget, you use your Naira card to consume dollar transaction. You are not the dollar transaction that you have just done, activity transaction that you just consummated, will be funded from the reserve because the FX has to be provided either by your bank or your bank making recourse to the central bank. So the reserve you are seeing is not for consumption, is to help you do business activity. You want to buy raw material, or you go to the FM window, there's no supplier of FX. The central bank will come, be the supplier of FX for that particular period in time. So what they are doing, they go into the reserve, sell from the reserve, so that people that want to import raw material can bring in raw material, so that people that want to import machinery can bring in machinery. At the end of the day, what that would do is that it will improve economic activity. People, of course, when you increase demand, when you increase production, it means that you actually need to employ more people. When you employ more people, what that will mean is that it will improve economic activity.
Yeah.
So what we are seeing currently, of course, I agree with people to say, oh, there's hunger in the land. Why are you doing this? Yes, different responsibility by these different authorities. The monetary policy guy, their responsibility is to ensure stability of currency,
Stability.
is to ensure that they can actually rein in inflationary pressure, is to ensure that they control the level of cash in the circulation. But the responsibility that the person that asked the question, the person that has the responsibility, they are the fiscal policy guys. Their responsibility is not to ensure that the impact of some of these gains from the reserve and the likes actually now touch an average Nigerian sitting out there. I remember just recently, sometime last week, the president said something that was very, very insightful for me. He mentioned that it doesn't see the reasons why some states are actually erecting bridges and
Flyover
because
bridges.
you understand, because what is the population of your state that you are doing flyover up and down? Use this money to impact the life of the average citizen of your state. When you look at where we were coming from, at a point in time, and the governors will go to Abuja to go and borrow money from the federal government under the caption of the Paris Fund, Paris Refund. And that's what they use in actually paying salary. But now, a lot of state governments are now getting a lot of funds. The fund, what they need to do is focus on ensuring that these activities, whatever activity you are carrying out in your state, is impacting your people directly. I support the president in regard of creating bridges and erecting flyovers. Some states, you don't even need that as you speak currently now. Or even you see some states actually building, constructing airports. What is the population of your state that you are going out there to actually construct new airports? Where you have the fund now, use the fund to impact the people directly. Create economic activity that will help impact people's life directly. Bring us some of these things. Sometimes you can even create a lot of these poverty elevation program where you look at the whole your state structure.
Those ones are riddled with a lot of corruption, deeper, all those tax exchange and all
you
those.
see,
Those things are riddled with a lot of corruption.
I get what you say. I get what you say. But what I'm saying is that the reason why you can say it's riddled with corruption is because there's no data. if you have a good data in your state, you will know those people paying tax, you know those people working, you know those people that have business, and you know those people that are not doing anything. If countries like America can do this thing conveniently, it means that we could learn one or two things from some of these places. And all we need to do is take them back home, find a way to actually recalibrate it, and find a way to tweak it that it will suit your own environment. I
Okay.
understand that sometimes you see some of these things, but if we look at it from the fact that, oh, there will be corruption, then at the end of the day, we ended up not doing anything that will help
Okay.
impact the life of people directly.
Yeah, I agree with you. The reserves debate reflects a gap in understanding between the fiscal and monetary responsibilities. Also, a gap between macroeconomic stabilization and maybe household welfare. Even though I also agree that if we have stronger buffers, it will only matter to citizens when they eventually support investments, jobs, create jobs, lower inflation, and also improve on the purchasing power. But Deepo, as we wind down, if you had fresh capital today, what are you looking at? Are you going to be investing in fixed income or equities, or would you be holding cash? Give us an idea, something that we can copy.
I will invest in fixed income and I will invest in equities. There's no reason for me to hold cash in times like this. There are a couple of good names in the market. I mentioned MTN. I love MTN. I love Access Bank. I love Lafarge. And I love Dangote. So there are a lot of good names in the market where I can push my phone into. And don't forget that we also need to look at it. What is my investment horizon? I'm not a short-term investor.
Investor.
I'm looking at a short, long-term horizon. So I'm actually going to push my fund into equity market. And so for fixed income market, depends on the size of the fund. So I can actually play in the savings bond. I'll play in the big bond market. I'll play in the treasury bill
Treasury
market
bills
if there's
market.
any. Considering that where rate is currently, our rate is still very close to 20% for a 1 year instrument. Not a bad one for people looking to actually invest. If you are getting a 20% return, the average inflation figure for the year is not up to 17%. So it means
Yeah,
that your capital has not been eroded. It means that real return you still have close to about 3% worth of real return. I will look at I'll also look at it from that perspective. So it is not for me a time for me to sit on cash. It will be a time for me to actually push out cash.
all right, brilliant. Thank you so much, Deepwa. Always a delight listening to you break down happenings in the Nigerian capital markets. Always uh, a delight as well hearing your insights into all that is happening in the Nigerian economy. Thank you so much, Deepwa.
It's always a pleasure, Dr. Kafo. Thank you very much for having me today.
All right. Also, thank you to our listeners. Thank you for joining us this weekend. If you enjoyed this episode, please like this video. Send me your questions or your comments. Put them in the comment section, and I'll be reading those comments and be providing responses. Again, please like this video on your way out. Subscribe to the channel and hit the notification bell. Don't also forget you can share this video with your communities. We'll be back again next week. Take care, and we are out.